Hi, welcome. This is Mary Ellen McGonigal with your Saturday, November 5th Weekly Edge Show. Let's go ahead and take a look at what we're going to be covering today. We are going to take a look at the current markets, see where we close the week, and then also beyond that, uncover where the strength was in the markets this week with an eye toward preparing for not only next week, but beyond as well. We're also going to take a look at some of the more impactful news that drove market action last week. And again, it is news that will drive the markets beyond just next week. And then viewer question of the week, and it's going to be all about a very highly impactful, some call it game-changing news that came out today. And the question was, how can you capitalize on that news? So we're going to share some stocks there as well. And so here we are. Let's begin and take a look at the news. I talked about a game-changing news item that came out on Friday, and that was that Pfizer has a COVID pill that has superior efficacy to Merck's earlier announcement of their pill. It is viewed as something that will really shift the dynamics. Potentially those that are not inclined to get vaccinated, they may be more inclined to take a pill, and then from there is an anticipation that there will be improved movement and select areas that are going to benefit, and I will get into that. Also, we did get very positive news on Friday as well as it relates to the employment index for October. In particular, unemployment dropped to 4.6%, but equally as important was the wage cost that dropped, and then also the hours worked per week dropped a bit. Both items will reduce that wage pressure that was in place that was expected to spur and continue inflation. So it was good news on the inflation front, and we'll talk about the impact elsewhere for that news. Also, big last week was the fact that on Wednesday, Fed Chair Powell came out and did announce that the Federal Reserve is going to taper their bond buying beginning this month. And this is what the markets had anticipated, and the news was generally very well received. So from here, let's go ahead and take a look at the broader markets and then underlying areas within the market as well. And here we are with a daily price chart of the S&P 500. We can see a continuation rally into new highs again this week. Your RSI, that's a relative strength momentum indicator, is trending upward. It is in an overbought position, however, so we are going to keep a close eye on those overbought conditions to make sure to see if we get something in the way of a pullback or maybe something more, but for now we are in good standing. The stochastics, this is a faster moving momentum indicator, and it is up here also in an overbought position, but generally positive overall. The broader markets are looking quite healthy. So let's go ahead from here and take a look at the underlying sub-industry groupings in the S&P 500. So this is a 2-month daily price chart view of the 11 sectors within the S&P 500. I've gone ahead and added this RSI, relative strength indicator, descending order, and in essence on this upper left quartile we are looking at areas of superior outperformance. Again, this is where your strength is, and for those of you that have been watching this show each week, you'll know that consumer discretionary has been up here at the forefront. So we can see really continued vibrancy in discretionary. It is rather selective, however, and we will get into that. From here, technology has also been up in the forefront. This is all about earnings. Next segment, I'll share with you those areas in tech that are really pushing the technology sector to new highs, but quite constructive, certainly for those growth stocks. They do fare better when inflation is kept at bay, which is what yesterday's numbers did imply. So from here, of course, as always, we want to make sure you're aware of those areas that are in the weaker quartile. And this again is a repeat of last week. Communication services sector still languishing a bit. One other area that is showing up as weak, however, next segment I'll share with you, not is all poor in this area, and that is financials, XLF. Financials actually were among the weakest performers for the week, but from here we're going to take a look at an area in financials that held up quite well, and that ties in with this next segment where we are looking at some relevant high active and really high forecasting areas and ETFs that represent those areas. So what I've done is added in the small cap Russell 2000, the Nasdaq, as well as the Dow. And then we have the price of oil, regional banks, yields, also very relevant in this environment, and so on. So from here, again, RSI descending, and let's take a look. I talked about technology hitting a new high. This week it was all about semiconductor stocks, and these stocks had a huge week with a 9% rally, pushed this index SOXX to a new high, all about earnings. Lots of really strong growth that's being seen, and it's expected to continue to drive select semiconductor stocks quite a bit higher. From here, we can see the Nasdaq, big outperformer. It was up 3% relative to the S&P 500, up 2%. This is going to be all about technology helping to drive that Nasdaq to new highs, also in good standing, but overbought as well. So from here, we can take a look at the Russell 2000 small cap index, and this particular index and area was up 6% for the week, and that is a big move for a broader index. We can see the move pushed this index out of a very lengthy base. This MACD momentum indicator below points to further upside, lots of vibrancy. Many of this is earnings related, which is helping to propel a number of these smaller stocks higher. From here, of course, we also want to pay attention to those areas that were a bit weaker. Biotechs had been in the throes of attempting to reverse their downtrend. Not so. That was denied. Again, earnings driven in that area as well. And then also dropping was the yield on the 10-year Treasury, and it really did have a pretty significant drop as inflation fears receded. Surprisingly, bank stocks, which do well in a rising rate environment, were able to withstand that drop in yields. So from here, I do want to share with you areas of the market that are expected to benefit from Pfizer's announcement of a highly viable COVID-19 pill. So first up, I'm going to take us through the market movers on the S&P 500. These are the stocks that were up the most on Friday, which is when the news was released. So I'm going to head and click this candle glance view. This is going to provide us with that 2-month daily price chart of the biggest movers on Friday in the S&P 500. And quite simply, there is a theme here by way of looking at these individual stocks. Expedia, of course, one of the largest travel-related booking companies. They did come out with good earnings as well, but that was propelled higher. We can see Royal Caribbean and Carnival Corp. These are both cruise lines, of course, that really rocketed higher today, up almost 9%. And then we did see a number of airline stocks. This is Delta Airline reversing its downtrend here with an 8% gain. So quite simply, we can see that travel and leisure related stocks are in the throes of potentially continuing to trade higher on the COVID pill news. BKNG, another travel booking site. As far as individual stocks benefiting and continuing to potentially move higher on the news, we really don't have to go much further than taking a look at Pfizer, PFE, and this is a daily price chart. What we can see here is this tremendous move, up 11% on very big volume. A couple of characteristics I want to point out to you that signal that Pfizer could easily trade quite a bit higher. First up here is the MACD. That's a moving average convergence divergence momentum indicator. And it just now today entered into positive territory. If we go back historically, we can see that that uptrend, once it begins, can in fact take place for quite some time. The other outside momentum indicator we can look at is relative strength, RSI. While it is a little bit overbought, we can see that it can remain overbought for a lengthy period of time. One last characteristic we can look at here is the tremendous volume that PFE experienced on Friday following the news. This volume is indicating that investors want in and oftentimes points to further upside. From here, let's go ahead and take a look at an intraday chart as a way to further gauge potential entry points and what to be on the lookout for. This is a 15-minute price chart. And what I did want to point out to you here is the initial rally on the news. PFE did pull back, but take a look. It closed the week above its 5 and 13 simple moving average, is in a confirmed uptrend, and we are poised to see the black line up through the red on the MACD, which is a bullish signal. So super near term, PFE has further upside. And another way that you can play this move into leisure-related stocks is quite simply looking at an ETF. And one of the larger names is Invesco Dynamic Leisure and Entertainment ETF. PEJ is the ticker symbol. I'm going to go ahead and pull up a daily chart here. And you'll see that today's news pushed the ETF up 4%. And into a base breakout, big volume, not particularly easy to tell here, but it was above average volume. And then we can see that MACD black line up through the red, which is an indicator that the recent downtrend momentum has shifted into a positive territory. Some of the bigger holdings within this ETF is Starbucks, the stock, not the prettiest of charts by any means, but it did have a big move up 4% that broke the stock back above resistance. EXPE, which we talked about earlier, is a big component of PEJ, the ETF. And then Disney. Now, the chart doesn't look great, but they are due to report earnings next week. So depending on the results there, this could be a big mover for that ETF as well. And one other stock that we can take a look at, and it's certainly travel and leisure related, that is Marriott International. MAR is the ticker. The stock ticking up to new highs. They came out with their earnings 662% year-over-year earnings growth. We can see the MACD just now having that positive crossover with your RSI in positive territory. The stock is a bit extended. I'm going to add one more simple moving average that can be really helpful when stocks get propelled into an uptrend. That is a 5-day simple moving average, currently sitting at about 164. So a pullback to that 5-day level could be an ideal entry point as Marriott is continuing to move higher on big volume. That's it for this week. Everyone have a great weekend, and I will look for you next Saturday. Before you leave, be sure and use that link below for a special trial offer of my bi-weekly MEM Edge report. We're going to talk about the overbought positions in some of the broader market indices and what we need to be on the lookout for, as well as rotation that is taking place in other areas that we haven't discussed here. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.